Well, hello everyone. Today we are going back into the BRRRR, how to BRRRR successfully. So as usual, if you have any questions, type them in over in the chat bar. And after this recording, it will go out on YouTube. So we could send this out to you, or you could have other people watch it. So today we're going to go through the B in BRRRR, because the B, the buy, that is probably 75% of doing BRRRR right. If you do the two things that we'll talk about today, which is buy the property right and get the buy mortgage correctly, and we'll go through all of these things, you're going to find that BRRRR works really well. We see a lot of people here, a lot of people say like, hey, BRRRR really doesn't work because we have to put money into the deal. So we are going to go through exactly how you do not need to put money into the right deal. And even if it is a deal that, you know, you're in a market kind of like Colorado where you have to put some money in because the loan to values, the properties, the markets are so hot that you're going to have to do that. So that's what we're going to go through today is the B, which I consider the most important part of this, because if you're going to buy right and you do the buy purchase right with the loan, you're going to get this down and you're going to be able to accelerate through it. So as always, like I said, we record these, we put those out on our YouTube channel so people can watch them in the future, or if you have to go back. But the BRRRR, which is the third week, the series BRRRR is the third week in every month. And we're going to go through each letter, and then we're going to start going through examples as we go forward too. So if you want to watch past ones or just other videos we have, just go to our YouTube channel, Hard Money Mike, and you'll be able to see those. Subscribe if you want to, you know, see other ones in the future. So let's start with our fundamentals. And our fundamentals is always, our goal is to get you as an investor, as a real estate investor, from starting with little to nothing to be free in 3 years, which may be just, you know, getting the job you like, being able to do the flips on your own, whatever it may be, but being in a position from starting from wherever you are. And a lot of people start with little to nothing to be free in 3 years. Us as a lender, we've been doing this now for 22 years. Our goal is to make you successful, to give you the tools to be successful. The real tool is not just the, you know, how to do something like BRRRR in theory, but how do you actually do it in practice? Because the more we help you, the better you become as an investor. And then also it allows us to win also. So we help you, you help us. It's kind of a win-win situation. This episode is all about BRRRR, and it's all about the buy. Because if you plan this correctly, if you buy it correctly, we help people all the time and have for probably the last 12 years before it was even called BRRRR, buy properties with nothing down and do it quickly. We helped a couple of families, you know, back a few years ago buy 10 in 1 year with little to nothing in, and that's why they're able to do that. And then at the end, we're going to kind of go through just the difference, just the numbers, so you see the difference between a wholesale and retail. Even if in some markets like Colorado, where you might not be able to find the right property at the right price, the discounts might not be big enough in some of the markets, but we're going to show you exactly how to even take advantage of BRRRR when the markets are not there. So once again, a recap. So BRRRR, the whole strategy is buying value add properties. We go through value add in some of our other videos, but it really is the fundamental of buying properties that are under market, putting some value into them, fixing them up, splitting off, you know, popping the top, whatever it may be, to create the actual worth in the property than is greater than what you bought it for and what you put into it. So you're creating wealth kind of on a thin air, but you're just taking properties that need work, need some help, and you're bringing them up to the market. So once again, BRRRR stands for buy, rehab, rent, refinance, and repeat. And doing it correctly, which is the zero down, you can repeat a lot faster, because we see a lot of people do these strategies and they're putting in 10 to 20%, even on properties that are 75% and below. So the repeat takes longer. They might take a year to longer between properties. Our goal is to show you how to do this as quickly as possible. So The one thing we want to go through is BRRRR is real. We've been doing this, like I said, for 12 years, long before it was called BRRRR. It's not a myth. There is a way, a very real way, to buy properties with no money in, as long as you do it correctly and work with the right people, because you're going to find that some people just don't believe in it. So we're going to start with your plan. What is your plan? What do you have? How many properties do you want to buy? What is your credit score? What are the assets you have going into this? And knowing your numbers. The one number that we're going to need to know is 75% loan to value. So we're going to go through that. Then we're going to go through, like, there's two loans in every BRRRR. There's the purchase loan where you buy it and you fix it up. And then there's a second loan where you refinance it into your long-term hold. And the key to the buy is having the right lender up front that could help you maximize and limit the amount of money you have into it. So you need to understand these things. And then once we get to the second R, we're going to go through refinance and how does that look and how to do it right and how to do it quickly. But this is all about the buy. And there's two things in the buy we're talking about. And number one is you need to find value add properties where you're at 75% of ARV or lower. So we've gone through ARV a lot before, but basically what it is what will the property be worth once you fix everything up? And what is the market value, the appraised value, the ARV, whatever that is. We'll go through an example here coming up too. But number one, you got to buy right. And buy right in BRRRR, to make it zero down, is 75% or lower, all in. Number two, you got to buy with the right lender. Like I said, with BRRRR, there's two loans involved here. Number one, there's the purchase loan where you buy the property that needs rehab. And then there's the long-term loan. So we're just talking about the upfront buy the property loan. Typically, you're going to be working with a hard money private loan, maybe some individuals you know. Those are the lenders who are going to be able to max out this buy side. And maxing out your buy side for your loan is key to having little to no money into the property. So here's one of the things you have to look at. It's not going to be a bank. It's not going to be most of your traditional lenders and even some of your larger hard money lenders, because they're going to require 10, 15, or 20% in at least of the purchase price up front. Once you put money into a transaction like that, once they require you to have money in, it is very hard to get the money back out on a refinance. So the buy lender has to be right. And it's traditionally not a bank, a traditional mortgage company, anything else like that. And that's where people get frustrated with BRRRR, because they go out and talk to them. And these bankers and everything are saying, like, that is nothing you could do. You're going to have to put money in, and then when you refinance, hopefully you get it out. But when we get into the refinance, you're going to find out there's some issues with the refinance that limit how much you could get out. So number one, you got to work with the lender that will max out, will allow you to borrow up to 75% of the after repair value, even if that means they're going to cover the purchase price, part or all of the rehab, closing, and holding. So whatever they could fit under that 75% is what the ideal lender on the buy side will do. Because the less money that you come out of pocket, the more money that the buy lender will allow you to put into the loan, the more likely you're going to have zero down into this. And part of this is just understanding, and I'll go through it quickly, the refinance side. Because when you go to refinance on traditional loans and even some of the non-traditional loans, they'll allow you to go up to 75% of the appraised ARV value on a rate and term loan, which means you're just paying off the other loan. If you put money in and you're trying to get money back out, they're going to say we limit you to 70% of the after repair value. So you lose 5% there. Plus refinances cost a little bit more. There's some other caveats that you have to own the property for at least 6 to 12 months, depending on your lender, to use appraised value for a cash out refinance compared to a rate and term. So once again, two things: purchasing the properties under market, working with a lender that will allow you upfront to put everything into their purchase money loan, because it has to be a purchase money loan. And that could mean purchasing the property, rehab, closing, putting all of that in, nothing coming out of your pocket, will be able to allow you, let's go back there, will allow you to get out of this with zero, which allows you to get to the next property and to the next property. The less money you have to put into each deal, the faster you can accelerate through to the number of properties you're looking to purchase. So the other thing we wanted to go through is, as I said, there's certain markets that you just can't find properties that are so hot, you can't find with a zero down. But in Colorado, we see a lot of properties where people are using BRRRR, and it's still a great method, even up to 85% of the after repair value, which means everything that they need, the purchase, the rehab, everything is going to be up to 85% of the value in the future. And we're going to show you why that's still, and BRRRR is still a great method when you're buying properties compared to retail in this scenario. So here's something that we see a lot in markets like Colorado, maybe higher numbers, but let's just look at an example. Someone is buying a property, the market value, the after repair value, the appraised value, whatever you want to call it, once it's all done, once it's going to be rented, is worth $300,000. And they want to start investing, and they have 60 grand available to them through lines of credit, their savings or whatever they have. So they have two options as an investor, what you could do. Number one, you could buy retail. So you could go and purchase a property that someone's already fixed up, it's ready to go, put 20% down, which is all the 60 grand you have. You could go take out a loan for 240. So now you have 60 grand down, 240 in a new loan. As you see, number one, there is no created equity. So everything that is this 20%, the equity you have in the property, is something you paid for. It's nothing that you have helped your net worth, have helped your equity, and even your cash flow, because your loan is maxed out compared to, and boy, did this not show up. Sometimes when I take it from PowerPoint to this service, something doesn't line up, but we'll get through it. So let's just say we're doing this 85% deal, because in some markets we just can't get to the 75%. And someone buys and has all cost in of $255,000, which is 85% of that example $300,000 ARV we showed. So 300,000 times 85 is 255. So they have the 255,000 in this deal. Now, if we remember right, we could borrow, once we go to the long-term process, we're going to be able to refinance up to 75% of that 300. So we'll be able to get a loan for 225,000. So in this case, an investor coming in and using BRRRR, even when the market is not at 75%, you're going to see that they're going to only need $30,000 for the same property that will be worth 300. So number one, they've just created equity. They've just created net worth. They've created a ability, if the market goes down, to not go into negative equity either, because between the 255 and the 300, the 255 is everything they have into it, and the 300 is what it's worth. They have created $45,000 in instant equity. And this is just on one property. They had 60 grand. They could do this twice. So they could have two properties and create $90,000 in equity. And also, if you look here, they also have less debt. So on a BRRRR property with 30 grand down, the loan was only 250, 225. Over here, remember, it was 240. So the retail buyer is getting more debt, no built-in equity, and is only able to do one property at a time. So BRRRR works even when there's less than, the 75%, which will get you to the zero down. So buying right, buying in your markets, all of those things are very critical. And this once again didn't show up great, but here's the thing. there's two things on the buy. And if you buy right and if you do your loan right, you are 75 to 80% there on doing BRRRRs right and being able to do exactly like they say in Bigger Pockets, which is, you buy them, you rehab them, you refinance, you rent them, and you repeat. And you can repeat them a lot faster if you're finding properties in markets that are 75% or less all in. That means purchase, rehab, closing costs, anything and everything. If you can find properties that are at that or below, you're going to be able to accelerate this faster. Number two is finding the right lender. Finding a lender who understands BRRRR and is willing to lend up to that 75% of the after repair value, not the loan to current costs, but the after repair value, because then they're covering everything. They're covering all the purchase, all the rehab, everything else like that. And when you go to refinance, they'll be paid off. You'll have nothing out of pocket, and it's going to work ideally. So that's our what we try to go through and we try to teach people is the key to this whole thing is buying properties right, using the right lender who will maximize it out. So whenever you're ready, if you have a deal, you can email us, you could call us. Sarah and I will be happy to help you. If you are still learning, there's great resources out on our YouTube channel, Hard Money Mike. Lots of videos, lots of different things on investing and how to do it. We're also going to start in January actually having a live deal flow where you could bring in a deal and we'll analyze it. We'll do it online so other people could see, or we'll bring in a deal that we just, completed, and we'll go through the numbers too. Because I think sometimes looking at the numbers helps, and you can plug and play and go that way too. So to wrap this up, this is the third week is all about BRRRR. So next January, third week, we're going to go through the rehab. Just, what do you need to complete, rental grade? But the biggest and most important thing is how to help the appraiser get the value you're looking for. Some appraisers go in and say, well, you just purchased this for, this number. Why do you think it's worth the market value? And sometimes you just have to help them, show them what you've done in the right way that they don't look at it as, influencing them, doing something that's illegal. Do it the right way so you make sure you can get the most value out of that. So I really know that this is the most important thing on BRRRR is buying it right, buying with the right lender. If you have any questions, reach out to us. We'd be glad to help. And we look forward to you on our next, webinar. And as always, happy investing. Thanks, guys.